Thank you very much, and a very good morning to you. So I was told to be fast. I can summarize my presentation in climate change is happening. It's affecting about 2 to 3 billion people. None of them, most of them don't have insurance. The industry, the government, and the regulators are not fulfilling their role, and we need to do something. So that's basically the summary. Should I go back? No, okay. So just look at figures from natural disasters, just on global, not only on ag. We had in 2018 160 billion losses, and about 80 billion were insured. So you can already see on a global scale, high income, medium income, low income, 50% of the losses only were insured. Now, of the natural disasters, what is affecting us most? So if you take out the dark red part there, which is earthquakes, which is geophysical events, everything else is weather, climate related. So weather related, climate related, natural disasters are the most severe ones and affecting us most. Now, insurance against climate risk, why is it so important? If you look at the FAO figures, Food and Agricultural Organizations, about 2.5 billion people depend on agricultural income. And we have seen lots of achievements in the past years that we got people that are having hunger. We got them down, so that's the graph here, there. So the numbers were going down, but since about 2 years, the numbers are going up again. So people are feeling more hungry now. And what's also important, if you look at the chart here, there below, most of the people that suffer from hunger live in countries that have a high climate risk exposure. So that's why climate risk is really important to do something and to manage it. Now, not surprising, losses in agricultural production are certainly mostly related to weather-related natural disasters that you can also very clearly see from the FAO charts. I will be very brief with the definitions. We heard the definitions. But what are we actually talking about when we talk about microinsurance, inclusive insurance, insurance for the low-income market? It's an insurance that's specifically developed for that market, because people may never had insurance before. They may not be able to read. They don't have access to banks. So it's specifically designed to address that market. It's certainly managed based on risk principles, clear, and it's affordable, whatever affordable means. Many people ask me, well, can poor people pay for insurance? Then I ask them, what does it cost not to have insurance? What does it cost not to go to the hospital and maybe then die and lose the breadwinner of a family? What does that cost instead of not having insurance? Now, the big question, we spoke about the responsibility of the insurers. Do we really see a person like that gentleman who I met about a year ago in Peru, who's a farmer, has a decent, like 3-4 hectares land? He is producing artichokes. His sister has other crops next door. He was going through a program to change crops that are more resilient against drought, so he's now producing artichokes. But no one is offering insurance for artichokes in Peru. So he has a decent income. He's not a big farmer. He's not a poor farmer. He's like at the edge, above poverty line, having an okay income, but he doesn't have any protection because he doesn't get insurance for artichokes. And that's exactly the role of insurance. So you make your way out of poverty, and then something happens and you keep on falling back. And if you don't have that network of an insurance, these farmers, these 2.5 billion people that depend on agricultural income, when weather-related disasters happening, they're being pushed back to poverty again if they work themselves out of poverty. Is it insurable? Well, there is certainly, and that's around every line of business, health, life, there's certainly a big number of people that would be insurable but doesn't have access, and there's certainly a number of people that would not be insurable, but we need other approaches. Take me, I have a handicap. I would never get health insurance on a pure for-profit, pure private-based approach. But because German government provides public health insurance, I have health insurance. So there are solutions out there. If government and insurers and others work together, we can also cover that part. We can certainly cover that part, and we already covered the upper part, but that's still not enough. Challenges. We heard some of the challenges today, but I would like to summarize some of them, and the red ones to me are the more important ones. We don't have insurance available in many countries. That's clear. It's simply not being offered, and there are reasons for that. We have small premiums. We have relatively high transaction costs. If you have to print out a policy, send it to the client, that costs the same if that's a $100 or $100,000 policy. So volume is key. We have low and irregular income. Farmers depend on income after crop season, and they may not have an income every month. Insurance illiteracy. As I said, some of the people never had insurance before, maybe. Lack of insurance knowledge on both sides. So the client doesn't know insurance. Also, some of the people the organizations that offer insurance, microfinance banks, cooperatives, they try to protect their members, but they are not maybe the actuaries and the expert that know the insurance in all detail. There are big numbers of people being somehow insured through non-registered insurance schemes, especially in Africa, funeral societies. People put money in a pot in a village, and then the funeral is being paid. So they don't calculate the risk. So the insurance knowledge there is not available. Lack of infrastructure, that is changing rapidly because we have mobile phones, we have rapidly growing mobile money. I'll speak about that later. Lack of data. Weather stations, the grid of weather stations in many regions is not very good. Even if we would have a perfect weather station grid today, we're still lacking historical data which we need to calculate. That's changing too. There are solutions coming up. So that's, and last but not least, certainly regulation. I've been to a country last year where you have to print the policy, you have to stamp it with a stamp given by the regulator, and you have to give it to the client. So if you talk about mass market, if you talk about digitalization, if the regulation requires you to print and stamp the policy, forget it. So regulation needs to really provide the framework that's necessary to meet the need of the masses. So what do we actually have? Is it as bad as I'm explaining? It kind of is. So I'm just summarizing a few figures from a landscape of microinsurance studies that the Microinsurance Network did with the support of other donors like us and AXA and others. And if we look at Africa, the numbers are a bit outdated, but I think in the overall figures, the relation is still the same. We found about 60 million people with microinsurance, which means on a private-based approach, it's not a governmental scheme. Only a little over 1 million had agriculture. That changed with some new upcoming schemes. Property insurance also was hardly available. The same with Latin America. So the dark blue is agriculture. That looks a bit better. Property insurance also agriculture. Insurance penetration or the market in Latin America is in general much better developed than in most regions in Africa. And if we look at Asia, and that is again excluding governmental schemes, we found some schemes in India, some in the Philippines, but overall there was not much available. And even if you include like the whole world, industrialized country, non-industrialized country, you see the gray spots in the world, mainly Africa, where there's basically not much available insurance based on risk principles in the field of agriculture. And that certainly covers most of the regions where there's a low-income population. So what can we do? Don't already mention technology. That's a picture from an app that's been developed in Nepal by nurses. They go around in villages and assess the health status of villages. So that can be used, that data can be used to calculate insurance. When we talk about agriculture, we have, starting from satellite images, weather data, soil data, now we have drones that can fly around. We can take pictures. We have the GPS coordinates. We can ask a farmer to take a picture how the crop looks like, provided he actually takes the crop that he has and not another crop that's currently suffering. So there's a lot of data and information available that we can now use, and we couldn't use not a long time ago. How old is the iPhone? The iPhone is only like 11 years old, and it feels like it has always been there, and we would die tomorrow if we couldn't have our iPhone in. So the smartphone is available, and we have cheap smartphones. I've seen $20, $10 smartphones that can do WhatsApp, Facebook, GPS, everything. So it's available, and the penetration of smartphones is increasing. Something else related to smartphones, mobile phone usage overall, that's figures from the GSM Association, that's the Global Association of Mobile Network Operators. Starting in Kenya, but now other countries, they have prepaid contracts, so you buy airtime, you put it on your phone, you can use it like a bank account. I can transfer money from A to B. And there are now about nearly 700 million registered phones that are being used somehow as a bank account. Why is that so important? Because most of these 700 million users never had access to a bank account before. And the ability of making digital payment and receive money like really fast, relatively low transaction costs is crucial also for insurance. So you can use it to collect premium, you can use it to make payouts. You can also use all the data on the phone. So it's a tremendous opportunity which we didn't have 10 years ago. So we have to use that opportunity. Insurance is already being sold through these mobile phones. 2007, GSMA found 60 million people insured through mobile phones. It's rapidly growing. Unfortunately, not surprising, ag is not that big. It's the dark section, around 1%, but it's something. So you can start using that. You can start with other insurance. You can grow an insurance culture. Ag is a very complicated insurance, and sometimes we will maybe hear from Sebastian and Queenie later how complicated it can be. So people need to understand insurance, start maybe with easier products, and then grow your market. Opportunities and challenges, I'll skip that overview of the regulations. That's a summary from a conference that took place about 2 years ago on technology. And the key thing is the speed of technological development. And I keep on hearing increasingly criticism from the industry, certainly. You wouldn't expect other criticism from the industry that they say the regulation is not fast enough. The speed of technological development is really overwhelming the regulators. And someone already said in some regions, whatever is not specifically allowed is forbidden. In others, whatever is not forbidden is allowed. But regulation needs really to follow up. And if I again quote that example from that country where you had to print the policy, where you had to stamp it, you will never reach millions and a high insurance penetration with that approach. So we all need to sit on the table, and events like this are important to do so, to understand what we need to do and really create the framework that digitalization, that is challenging the so-called developed countries, but also is a huge opportunity for the people that don't have access to insurance can actually take place, and that the regulation is really creating the frame to protect the consumer, certainly, but allows innovation in the insurance industry. Some examples of microinsurance. I just pulled out 3 examples so that you can see how that actually works. That's a very interesting example. Started in Kenya, was jointly developed with a seed company. So a farmer buys a pack of seed. In the seed bag is a code. You use the code to register through your phone. It's an index-based product. If in a certain period, in the planting period, there's not enough rainfall, you simply get a new bag of seeds. So no one has to go around, assess the loss. You just get a bag of seed, you start all over again. Very simple, and it's working quite well. 2015, they already had nearly 400,000 farmers. How can it work on a larger scale? We need the governmental involvement. So if you look at the so-called developed world, the US, Europe, most of the ag schemes are highly subsidized. So without governmental involvement, it will be really difficult. And one of the interesting new schemes, we had a conference last year in Zambia, the International Microinsurance Conference. It's the new Zambian Agricultural Insurance Scheme, which is, again, very simple. So the government subsidizes a farmer with, in exchange rate, $170. The $170 can be used in certified stores to buy input, farming input, fertilizer, seeds, whatever. You only get $170 if you add $40 out of your pocket. So you have $210, which you can use to buy input. Out of the 210, 10 are deducted for an insurance premium. And again, it's a weather index. If there's not enough rainfall or too much rainfall in a defined period, you get the money a second time. Again, very simple, transparent. Farmers have to add something, government is adding something. There's an incentive to be part of the scheme, because if you don't put money out of your pocket, you're not getting that. India, I'm not going into details, but just to show you examples how that can work on a large scale. There's kind of a mandatory scheme in India where farmers that have a loan have to have insurance. They pay between 1% and 2% for certain crops premium, but that's not the actuarial premium. So the difference between that premium and the actuarial premium is subsidized by the government. And that scheme covers, in 2017, around 50 million farmers. If you multiply that by how many family members one farmer has, it's a big number of people being covered. It's a governmental scheme, started by the government. The industry is kind of bidding to take over some of the risks. So the risk is forwarded to the industry, and it seems to work reasonably well. So we had this micro schemes on a one by one, on a one farmer base. We had national schemes. We need to complement that maybe with larger schemes. And I just want to show you the 3 months with no details, so just that you heard about that. There are in 3 regions. There's a Caribbean Catastrophic Risk Insurance Facility. There's the African Risk Capacity. And there's the Pacific Catastrophic Risk Insurance Company. So basically, where countries together form some sort of a pool, and if there's a larger disaster, there's a payout to a country. Because yes, in Europe, maybe the exposure to risks is not as high as, I don't know, Indonesia or the Philippines, but I must disagree. On tsunamis, for example, earthquake in Portugal, Lisbon, 1755. Lisbon was destroyed by a tsunami. I just read an article that it might be likely that the Mediterranean will have hurricanes, and we certainly have volcanoes. So there might be certain disasters also here in that region that are on a very large scale where it makes sense that countries cooperate. And last but not least, there's the G7 decision to have 400 million people insured against climate risk by 2020. That adventure is being steered by the Insure Resilience Program, which is housed at the GIZ in Germany as well. So let's see how they managed to get 400 million people insured against climate risks as opposed to 100 million some years ago. But again, it's a challenge. Climate risk is a big risk. Climate change is happening. There's a need for action. There's a huge untapped market. And poor are willing to pay. As I showed you that picture from that farmer, he wants to get insurance, but he doesn't get insurance. And we need to cooperate, public-private partnerships. We need the government involved. The industry has to fulfill its role, and the regulator needs to create the right framework. Only, I think, if we work through all the 3 levels, micro, meso, and macro, we will come to a really solid, bulletproof risk management. We need to integrate resources. Regulation needs to speed up. We can learn from different regions. We may not be able to transfer one scheme to the other region one by one, but they're very interesting examples. And at the end of the day, that's a quote from a cooperative insurer in the Philippines. Don't listen to your heart, listen to your calculator. We cannot lose money. Insurers cannot lose money on that. So if we risk on losing money, we need maybe subsidies or other solutions. So at the end of the day, it has to be somehow profitable, and there has to be a benefit for the industry and the client as well. If the client doesn't get anything out of it, he will not buy the insurance for the rest of his life. Thank you very much. I hope I was quick enough. I would like to invite you to our next conference in Bangladesh, which is the 15th International Microinsurance Conference, and the focus there is risk, climate risk. Thank you.